Hello guys. So we try just to see if things is going good. So if some people are here, please say hi. Going good. So one is watching, so please say hi, at least I know, and check if the sound is good, since it's just the beginning. So we will be waiting for more people, and so for today, so our subject is, will the stock market be volatile in December? Now this I got a question, someone asking me, what do you think about the market in December, since it is the end of the year? So so a lot of people are inquiring about what will happen in December. So as you might know, no one knows what will happen in the future. This is, I always tell you, but understand that people, when they trade a lot or they invest a lot, they see a lot of things. And since they see a lot of things, they try to understand what is the reason. Why, for example, in December it is volatile? Is it like this December? Is it the same like last December in 2018 or in 2017? Is it the same? Now, some people, they try to take conclusions and to think that what happened last year should be happening this year. This is not true. Okay? So there is one watching right now. So please say hi. Say hi and tell me if the sound is good, because I don't know. I'm just trying to work like this. So as I told you, so please guys, say hi and tell me if the sound is good. At least if I am speaking for 3 minutes, at least I know that it is like that some people are listening. Hello NASA. So NASA, is the sound, is it good? Sounds good? Oh, thank you very much. Thank you, Fabian. Thank you very much. Sound is excellent. Thank you very much. At least I am sure that everything is correct. Now, I will show you the chart later, and we try to see what did happen in some of the Decembers. December of 2018 to the 11. No, not 11. 17, 16. We try just to see what did happen. Okay? And can we take conclusions that each December will be the same? Okay? If this month the stocks will be going down, does it mean that last year they go down also? So this is why we are inquiring about all this. No, you are not late. Hello, Pamperdam channel. You are not late. We just begin. And I didn't speak about anything. I just try to have people together, and then I can begin to speak about the subject. And if you have questions, as usual, you can ask questions. And for those who are late later, they can watch the video tomorrow if they like. Okay? So our subject today is, will the stock market be volatile in December? It means, is there any volatility like in December where stocks are going up very, very quick, going down very, very quick, and we don't know what's going on? Is it the same like each year, or is it the same year is the same? Because a lot of people, they try to generalize. Now, generalization, it means that you see, for example, last December in 2018, the stock market has been going down in December, and then you say, oh, this December all the stocks will go down because last year. Now, this is what we call generalization, and I don't like generalization. For me, I will be prepared for anything. Since hello Kenyan boy. So we have Fabian, we have Nasa, we have Pump and Dump channel, and we have Kenyan. Normally they are 4, but I see only 3. Okay, no problem. So since we are just the beginning, we just go into a general thing. So in my opinion, as always, I don't anticipate things. It means I don't predict. Now, then you say to me, if you don't predict, how are you going to trade? It means if you buy, you are thinking that the stock will be going up. So this is predicting. No. Predicting, it is not. I don't use predicting in my trade. In my trading, like when I trade, I use criteria. Now, criteria, I buy according to my criteria, and then I will see what will happen in the future. I will see. If things are going good, I will stay. If things are bad from the beginning, I will exit with a minimum loss. So, because yes, Pump and Dump said last year the meltdown was great, but I just realized how great of an opportunity it was a month later. But Pump and Dump channel, I'm asking you a question. Go to my videos the first week of January. From the first week of January until May, and each week I say the market is strong. So maybe you have not been following me from the beginning of 2019. And I was each week, even in December, November. Last year it was very bad year. Okay? But when there is a trend, I always speak about this kind of trends, and I show you stocks. Okay? And at the end of the year, if you see my videos, I say that 26 December, the first week, 26 December 2018, it was the beginning of the trend. Now, for me, I don't know that it will be a very, very long trend, like 5 months. But I told you it's the beginning. But we don't know. So each week I was following the market, and I explain the week, what did happen in the week. And all the people who have been following me in the 5 months in 2018, they should have made money. Because in April, beginning of May, the market go down into a downtrend, and then it goes back. So I was talking about this also. Okay? So a lot of people who have been following me, they have at least known that there is a big trend, because I show each week when we have our live. Now, if you don't think it's true, you can go to my live videos beginning from last week of December, when we have the live, and see each week what I am saying about the market. Because at that time, this is where people make their money. It's the 5 months at the beginning of 2019. And most of the people, they say it's collapsing. They say the market will be collapsing. And I spoke that what I see is the market is going strong and great. Okay? So why the people are saying there is? Because the people, they tend to predict the market. Why you should predict the market? You will never know what will be in the future. If there is a collapse of the market, you will know it. It's the beginning, and it doesn't collapse in one day. The market, for example, in 2008, is the whole year going down. It's not a 1 day or 2 or 1 week. It collapsed. No. The collapse of the market should be the whole year. But last year, there is only about 2 or 3 weeks. In December last year, 2018, there are only 3 weeks where the market go down, and then 26 December 2018, the first day, the beginning of the trend. Pampendem said, I don't remember if I watched your video at that time, but I bought some preferred shares with 13% dividend yield just off the low. Could have got multiple series at 15. Should have bought more. Oh, okay. So, preferred shares at 13%. But try to see these stocks. No, listen, Pampendem. I didn't make one video. I make all the lives in January, February, March, April. Each week I do a live and I speak about those. I didn't only make one video. So maybe you are wrong. Maybe you have not been following me, or I don't know. And for me, I don't buy stocks because of dividend. If you are investing in stocks, okay, if you are investing for the long run and you like investing, yes, you choose the stocks that are giving dividend, which is very good. But in trading, understand that this dividend is taken from the price. 13%. I will tell you. Maybe you don't know. Maybe you don't know, Pampendem, how the dividend is done. It is your own money. They don't give you nothing. It's just your own money. I have explained many times this dividend thing, but people, they still don't understand the game. Okay? 13% or 20, even there are some 20%, it is taken from the stock itself. It's not it's the dividend. The dividend is not a profit from the company. It's from the capitalization of the company, yes, but it is not from the earnings of the company. It's not. Okay? For those who don't know what's the difference, I will tell you something that most of the people know about this, because this I always explain, but a lot of people they misunderstood and they always do mistakes about dividend. I will give you an example. Now, when you are working for a company and they match your 401k, for example, you have 401k, you put $100. Let's say they match each paycheck, they match 100%. So what does it mean for you? It means It means you put $100, your company will give you $100 for free. Now ask yourself, from where this $100 comes from? Does it come from the stock market, from the stock itself? No, it is not. They don't give you a dividend. They share with you profits because you are working for them, although you have no stock, shares. So did you Pump and Dump channel? Did you understand? Did you understand? If you are working for a company, you have a 401k, they share with you their profits, the company profits, although you don't have a stock. You have no preferred shares, you have no common stock, you have nothing. So this money is from the real earnings. It is not from the stock market. So you should think about two different things. The company has nothing to do with the stock itself. Okay? So try to understand that. So, Kenyan boy, would you mind doing a day trade example, please? So, Kenyan boy, I have made in the past, put day trade in my channel later, and you will find 1 or 2 or 3. I did it live, but I don't do day trading a lot, so I don't. Okay, I don't want to spend hours waiting for the stock to go up or go down. Okay, so Kenyan boy, you can put day trade in my channel search, and then you will find videos speaking about day trading. Now, if you want to have a training by videos, please go. You can send me an email, and I will. Let me see. Here is my email. So I will just put Djellala.net. So you can send me an email, and I will show you the. I will send you the link of the training. Okay, with a discount. I still have the 80% discount for those who are still interested, or you can just do subscription, which is golden subscription for 1 month, and you will get from 1 to 13 thing. Okay, now okay. So Pump and Dump channel said, you are wrong, Karim. Okay, I am wrong. Yes, it's okay. It's okay. Preferred shares are perpetual dividend. The cash comes out from the company, but the payout is reflected in the common stock. Now, since you understand very, very well this preferred shares and dividend, okay, you tell me that they are reflected in common stock. Now, common stock, what does it mean? It means the dividend that you see when the stock is going down that day when they give you the dividend. Okay, so I will ask you something, Pump and Dump, because this is a deep subject. Okay, send me one stock from that you bought, try to see, well, what is the days that they give you the dividend, because each quarter they give you dividend. So if it is like 13%, you divide it by 4. Let's say it is 12%. Okay, you divide it by 4. So each quarter they give you 3% of the stock. Now 3% is taken from the stock itself. So you own the stock. Since you own the stock, they take 3% of your stock. It's from the price of the stock. Listen, Pump and Dump scheme. Oh, Pump and Dump scheme. Pump and Dump channel. Please send me an email. We will discuss this because it is too detailed, and I think you continue to think that the company is sending money and it is not from the stock. This is your biggest mistake, and you will recognize this when I give you the proof. So since we are here, we are not speaking about dividend stocks, we are not speaking about investing. So please, Pump and Dump, if you are serious to see if yes, please send me an email. Okay, and we discuss this by email, and I will show you, I will give you the proof. Okay, I will give you the proof that what you are getting, it's not from the company, it's from the stock. You just say it by yourself. You said it's from the common stock. The common stock, anyone who has shares should have a dividend, and the dividend is cut from the price of the stock. For example, if the stock today is 100, tomorrow when they cut 3%, it will become $97. Okay? So this maybe you don't know, but you go to the stock, you will see it. So that's why people, they think that the dividend is something from the company. No, it is not. Okay? So you said as long as the company is solvent, the preferred doesn't get affected the way you say. My preferred shares went from 17 to 24 now. Okay. Pump and Dump, send me the stock. I will check later and I will see. Send me the stock. What is this stock is called? And at least I will see this preferred shares. Preferred shares, it means only that if the company is going bankrupt, they begin with you and they give you the money that it is left. They begin with you. That's it. What does it mean? It doesn't mean nothing else. This is what we call preferred shares. The common shares, if the company go bankrupt, they will give you nothing. Okay? Until all the people are get paid. But most of the time, you lose all your money. Okay? This is the difference between preferred stocks, preferred share, and common shares. I know you understand this well, but I think you are still confused about dividend. Okay, Pump and Dump, just put in the box, put the stock, or send it to me by email as you like, and we will discuss this later. Okay. Hello, there is another guy. S. I don't know why you don't put just a name for your channel ID. You say the money comes from traders. Which money that comes from traders? You mean the dividend? No, the dividend is cut from the price. Okay, it's cut. The company decide for the dividend. These are the only one which decide they decide for the dividend. They don't decide for anything else. Okay? Pump and Dam, you say, okay, we will do it by email. Please just take 1 second or two. Send me this preferred share stock, and I will check for you the dividend, and I will check when, and I will send you a chart explaining this for you. At least you will understand. You will understand this. Okay? I might be wrong. Maybe I might be wrong, but I will see. Okay? Yes, I understand. You say common stock is not the same as preferred stock. I told you. I just explained to you what does it mean. Preferred stock is when the company go bankrupt, you get paid first. That's it. The common stock, anyone who buys common stock that it is now online, like for normal stock, you will not get your money when the company go bankrupt. That is the main difference. Okay? Now, the Pump and Dump scheme said, I like being preferred to commoners. Yes, you think you have privilege, but if your company is not doing good and is going bankruptcy, you are not going to get all your money. Understand that, because bankruptcy, everything is sold to another company and they don't give that much. Okay, because it is just bankrupt. So I don't know how much they will give you, but there is no problem. Now, let's go to what we are talking about. So we are talking about in December. So here is the email and the website if some people want to check. Now, will the stock market be volatile? So let's go to the chart, and we see the beginning of this year, of this December, and we see the last December of 2018, and I will explain what I have explained the beginning of the year. Okay, so let's go. Okay, you are looking now at the chart. So this is the Dow Jones. Now we take the monthly. Okay, so this is the monthly chart of Dow Jones. Now, 2018. You see. The month of December of last year. So Dow Jones was 260. So here I'm speaking about the ETF, okay? I'm speaking about the ETF. So I'm not speaking about the index, because the ETF just tracks the index, okay? So it was 260 at the opening. It goes 216, okay? And then it ends at 233.20. Now, as you can see, 216.97 is the low of December. After this low, the stock market comes back very, very good to 233 at the end of the month, 31st of December. And then here, where I begin to say the market is strong. Here, in this, at the beginning here, which is the last 26 December. If you go to 26 December, you see, I don't know if I can reach it by days. I don't know if I can reach it. Let me see here. Yes, I can reach it. So, this is the day, 26 December, that I was talking about. Okay? From here, from this day, All this I was saying that the market is strong. Now when there is what we call a correction, I spoke about the correction. So here, what's it? Okay, then the stock market has been going good, and then it collapses again, then it goes good, okay, and then it collapses again, then it goes up again, then it collapses. So all these, I am following all these. Now this here, it's the beginning is from October 4th. October 3rd, Thursday, 2019, this is the beginning of the new trend. Okay? This is the beginning. And in our investing, we have begun investing in this era, which is very good. Okay? Now, let's go to the month and we try to see the month of 2017. So this is December 2017. Now, this is December 2017. It was going up from April 28, from April to January 31st. All these months the market was strong. So last year it was good. In December, which is here, let's say here, yes, it's this one, December and January. Now here in January, I told you guys, I have made a live saying that I feel that there is a problem in the market. Now, if you can remember, you go here before the collapse of the market here, before the collapse, you go to my live and you will see it. Okay? I think I have made, let's say, go to the days. If I find the day, you will check it on my channel. Let me see. Monday, 30 November. So here it is December. Okay, let's go back. It's 26 December. 26 January. Yes. So if you see here, 26, it was Friday. 29, Wednesday. 29, 28, 27. On 27, it was Saturday, I made my video. 27 January 2018, I made my video and I said that I don't feel good with January 2018. This video, you will find it, and I say I don't feel. Why? Because at the beginning of the year, they say that the market, they say that the market, if you can guys, if you can remember, at the end of January 2018, I'm not speaking about this year, I'm speaking about the other year. I don't feel well with January. Why? Whenever I go online, I don't follow news, but I see a lot of analysts like this boasting that 2018 will be an excellent year because all these other years they were excellent, so they say it's an excellent, and they ask people to buy. When they ask people to buy with recommendations, I understand that there is something wrong. They are preparing for something bad. I have spoken about that, and they say, what did they say? The title of the video, it was of the live, it was I think what are the solution for stock market crash? Now, when I say crash, you told me, oh, Karim, you told us that you don't predict anything. How come you say crash in 2018? Now, I say it not because predicting, but I felt it because all the big guys, the analysts, they were saying that there is a big, excellent year. I understand that it is opposite. Always, analysts, when they say it's good year, it means it's a bad year. Why is that? Because mutual fund or other companies, they pay these guys to speak about the market. They are paid. That's why I told you, never listen to an analyst. Even the analysts, they are contradictory. It means each one is opposite the other. So when they say something, it's because they are paid. They are not neutral in the market. They don't have stocks to sell or to buy. Well, what is they ask them to say, they say. Now, for example, they say 2017, 16, and 15, they were good, so this year is good. So they give you a logic that because of last year is good, this year should be good, which is false. And when I see this, if I find the video, I will let you know. Okay. Someone said, Fabian said, I can't hear nothing. So please, guys, if I am speaking and you are watching, is the voice good? The sound, is it good? I will not speak until you say to me. Because someone of you, Fabian, said, I can't hear nothing. So, guys, if you are listening, please write. So, say something about the sound. Do you hear me? So, everything is working fine. So this guy, Fabian, it's working good. Okay, thank you very much. Okay, so this HSSSFBBBB. So man, try to change the ID. At least I can pronounce your ID, because when you put HSSSS, so it will be difficult for me to know it's you. I have a question regarding some dangerous policy proposal by some politicians. I have read that they want to introduce Wall Street tax 0.5 from each buy and sell of stock. It's called speculation tax. Now listen. This has already begun. When you sell, they have already been taking some money from you guys. It is only when you sell, not when you buy. Okay? So this goes as a tax. And if you call your broker, he will explain to you. It is 0.00123, or I don't know. It's just little money, but it is. Those buying small stocks, $5, $1, $2, $3, they can get hit a lot. Okay? You will be paying, whenever you sell, you will be paying tax percentage of what you buy, but not 0.05. 0.5, it's too much. No, it is not like this. So if you say they are proposing, it doesn't mean that it is a law. If it is a law, it should be too much. And when should they take this tax? Is it like sale tax after things are sold? Okay. So I don't know about this. Now, whenever it comes, they will announce it in brokers. They will announce it, and they put this in your fees, and they say, and maybe they give a notice for all the people. So you say, how will this bill affect traders? I don't know about this bill. When it is done, you can tell me about it. But I don't know about this bill. You say speculation tax. You understand that not every bill will be approved. Okay? Because for investors, they will never sell. So it is good for them. But for traders, it is bad. Okay? It is bad. Let me see. Good. Oh, you said both buy and sell, there is a tax. It seems that the government needs a lot of money. The IRS and the government needs a lot of money. I don't know. Please, guys, whenever there is a true information that it is approved by a law, you can speak about that, because now I don't know. I didn't hear about that. But I know the sale tax, yes. The sale tax is introduced like 2 or 3 years. And every one of you guys, you are paying for it. Okay? You are paying for it. For this, you ask your broker, you say yes, you are paying for it. Some brokers, they put it inside their commission, and some other people, they took it from your money without telling you. They took it, and that's it. Okay? So it is just to understand what's going on. Now, let's right now, please, if you have questions, please begin asking your questions. What I'm going to do, I will show you the indexes that we always see, and I will show you silver and gold, and we try to talk about it. Okay, so let's go there. So this is the chart. So I will take those. As you can see, just to make you understand things, from the 3rd October, the market is doing excellent. Now these days here there is a gap down. A gap down here, what does it mean for an index? Now when there is a big gap down, or there is a big correction, it means there are some mutual funds who have some mutual funds who sold some stocks. And understand that when I speak about mutual funds, why I am always speaking about mutual funds? So someone tells me, oh, why are you always speaking about mutual funds? Because they are the movers of the market. If they buy, the market will go up, because they have billions of dollars to buy. And who will buy billions of dollars? You know, it is one manager. One manager chooses the stocks in the stock market and he buys. Other mutual funds managers, they buy also. They buy. But some people, they sell. When they sell, and they buy again. Because they sell some stocks, it is just a replacement of stocks. Let's say in 1 year, they buy, let's say, 50 stocks. Each stock they buy like $100 billion or $200 billion. They buy the shares. So, you see that those stocks are doing good. And there are some stocks that are doing bad. So, the mutual funds, they replace sometimes the good ones and the bad ones. Because he can't trade. Understand that mutual funds, they have laws. They don't just buy and sell, buy today and sell to tomorrow. No, they don't do that. Do you understand? So they should replace the stocks, mostly in each month. But in December, it has a relation to tax. A lot of people, they sell because there is tax. Some people, they buy. It depends. It depends on each person what he is doing. There are some tax related things that the people do is just because of tax. And mutual funds, it's because they change the stocks, they replace them. For example, he bought a stock last year. After 1 year, he lost 20% of his money on this stock. Okay? Let's say he bought, according to his shares, he bought $1 billion shares. So $1 billion, if he loses 20%, he has lost $200 million in this stock. But another stock he bought, he made, let's say, 300 million or 500 million or 600 million. Depends on the stock. So, the manager decides what to do. Either they sell them all together and buy new ones for the next year, according to what he sees. And there are a lot of calculations. They do a lot. They ask a lot about sectors, industries, what's going on, and it is related sometimes to politics. So they forecast, they speculate what the market will be, and that's why they they buy whatever they want to buy, whatever industries and so on. Okay, so let's go again to the chart. Now, here we are. So, we are here. The market is doing good, but we will never know until 31st of December and then beginning of January. We don't know what's going on later. But right now, it continues to be strong. We have a sell-off here, which is a gap down. That means mutual fund has sold a lot here. No, but some people, since they sell, they buy again. So they sell some stocks, they buy some stocks. That's why we have, as you can see, it's going down. Okay. Going down. And then going up. You see that? So this can continue going up or it can go down. So we don't know. SPY has already gone and continued the trend. See? So the SPY is better than Dow Jones. Russell 2000 is doing the same and is excellent and is going up. And I will tell you a trick. Look at the first day where the stock market has begun going to the trend. So here, it is 3rd of October. 3rd of October here. In 2000 stocks, small stocks, Russell 2000. 3rd of October. Now, S&P 500, 3rd of October. Dow Jones, 3rd of October. Can someone tell me why it is in the same day? Why the market move in the same day? And it has a trend. Now, if we can speak about silver, silver is going down. It has a correlation with stock market. When stock market goes up, silver go down. Gold also is going down. It can go up again, so we will never know. Okay? So, Pamp and Dem channel said mutual funds have to sell when they get redemption requests, even if they think the stocks in their portfolio are cheap. Now, listen, mutual funds, they are managers. And it is their decision. It's not some people who ask them, oh, buy this and sell this. No, it is not. That's why some managers, if their portfolio is doing good, they will be making a lot of money. In a few years, the first guy, the salary who has got a salary in a year around $3 billion. No one will make $3 billion in 1 year, but he made it. $3 billion, it's his money. It is his money. It is not the money of the what we call the mutual fund, because the mutual fund is thousands of billions of dollars. And they get a percentage. So it's a lot of money. And he is always a winner. Even if they lose money, it doesn't matter. He is always taking money from managing the trend. That's why this kind of jobs, it's not anyone who can go there and be a manager. So as I told you before, in general, the market right now, from October, 3rd October, November, beginning of December, 2 months and a half, it's doing good. So I will never know where it goes. As some people know, how do I get? How do you get a job as a manager? These jobs is for friends. It is for friends. It's not a job that even brokers, stock brokers, a lot of stuff. You should be inside the business in order to get opportunities, but not outside. For example, if you be a stock broker, you will see these positions, you will see how to get there, and you can apply if they accept you. Okay? But if you are like a normal job, you are outside, you have no one, you don't apply for stockbroker, you don't have what we call some degrees like in economics or in finance or in other things related to brokers, most of the time they will not accept other people. You said, what if I have a good track record? Yes, they can accept you. They can accept you. Before I get from a British company. They contacted me for giving me money, but their rules, I don't like their rules, so I don't accept their offer. Although I can trade and can have a lot of money, but I refuse because they ask me to do a lot of things that I don't want to do them. So they oblige you to do things. So I say no way. So if you have a good track record, there are some. I'm not speaking about what we call proprietary trading. No, those no. I'm not saying they are scams, but those you have a lot of fees to pay. So whatever you make, they will take it. So I'm not speaking about that. I'm speaking about the offers that some companies they do. Pamp and Dem said there are jobs as analysts where you generate investing ideas for the managers. That would probably be a good step to get a manager. Yes, as I told him, you should be inside, not outside. First, you should get inside with any job of brokers, banks, brokers, anything that you get in. Because this thing you should be very interested and you should focus where you want to go. So it is not something that it is advertised online and you find it and you apply. No, it's not. It's something which is mostly hidden. You should search for it. Okay, but if you get inside, things will be easier to see positions, to see. It means you know where to go and you know where to apply. Okay? So we are reaching 1 hour right now. So please, I need you to ask questions, because if there is so many questions, I will stop, because the subject of today is very small. And I want just to tell you guys that be prepared for good moves or bad moves. Because like I showed you just here, just to show this, I just showed you this. In Dow Jones, as you can see, I just showed you. Check here. You see this gap down here? Dow Jones was 281. It goes 273. So $8 lost in one day. In the second day, it means from one day to another day. So this is because of volatility of the market, where mutual fund sold. But here they begin to buy. Okay? Because when they sell, we have day traders, they see that there is a big selling, they short all the stocks, so they make money. So for Russell 2000, let's see the day here. The day here we have 2 December and 3 December. 2 December and 3 December, yes. You see that two candlesticks? So all are bad. All 3 days, it's from Monday. And SPY, also SPY, it has a gap down, as you can see. It has a gap down, as you can see here, gap down. It means the players are the same. The players in the market are the same. They sold a lot of shares. That's why we have a gap down. Okay? So, as NASA said, well-paying jobs are never advertised. Yes. They say it's a proverb or statement or whatever that says good jobs are never advertised. It means go find, for example, jobs like nursing, teaching, customer service, driving. These are the jobs they advertise a lot. Because you should do a lot, but you don't receive that much. A teacher, A nurse, they work too much, but compared to their job, they are not paid as much as they work. Nurses, like men or women, they bring them the whole night, so they have no life. They always work at night, most of them, and they don't work in the day, so their life will be a nightmare. They think they get some money, but their life is gone compared to the other people. So Pimpin' Them said, Kareem, what was your performance last year? I saw video of yours showing the performance of your trading and investing accounts a few months ago. Oh, for last year, it wasn't that good. I think it's 15 or 20. I don't know. It wasn't that good because there is a lot of volatility in the stock market. Stock market was very, very volatile. So wherever you make some money, you lose it. Wherever you make money, you lose it. That's why I didn't make that much money. Okay. What else? The thing I showed is about my subscription portfolio and investing portfolio. It's not my own. Okay. Because that is for education only. Is for education. So the performance doesn't mean a lot. What means a lot is that you should know how to trade. So this is the most important thing you get when you get my subscription. It's just to see how I trade. What's the thing you should do in every situation. This is the very good thing. Yes. Now, listen, Warren Buffett, when you say 20% or 10% or 30%, it depends on the stocks in the whole year. So investing, it is not the same as most of the time, you should not see the average. No. You should see the year. For example, go, let's say, to S&P 500 2018 and you see what is the performance. Is it -5 or -10 or +1 or +5? This is the thing which was in 2018. Okay? So if you go to Warren Buffett, you find might be the same. Because he is buying the biggest stocks in the stock market. Some of them are in Dow Jones, like Apple. He bought 1 or 2 or 3% of Apple, so he bought a big chunk of Dow Jones. So he will get the same results as Dow Jones. So don't say the average. Because some years it will be good, sometimes it will be bad. For example, I will give you an example. Warren Buffett, Berkshire Hathaway, has lost 50% of its money in 2008. Go and check. Let me check with you guys. For those who want to check, let's say the year. This is 2008. Now look guys, in order to understand what I'm saying. Look guys, S&P 500 in 2018, this is 2008, yes, when we have the big crash. The market began with 146, it goes to 74. You see that? It's 50%. If you go to Berkshire Hathaway, let's say Berkshire Hathaway, let's see here, 141,000, it goes to 47. It's nearly 50% or 52% or something. So you see that? You see that Berkshire Hathaway is the same as the market. is the same. Now this year here, 338, it means there is 338 by divided by 3. It's let's say it is 13%. So Berkshire Hathaway this year is 13%. Okay, so let's go to Dow Jones. Dow Jones 229, 282. So it means that Dow Jones is doing better than Berkshire Hathaway. It's more than 30%. So from 229, so let's say 52 dollars from 229 is like 21%. So the Dow Jones is making better than Berkshire Hathaway. Do you see that? So this is the proof. It means it is the proof. You go and you calculate by yourself. Berkshire Hathaway, and you see in this year or in any year you want. So it doesn't mean that Warren Buffett is always the best. No, he is not. Because the stocks he owns are in the stock market. So this is a proof from me that that you should always see the year itself. Now listen. Understand that Warren Buffett, he is taking money from the thing that people they don't understand is Warren Buffett, he begins in the 50s and 60s buying stocks. The market was very, very small and he buys a lot because of his friends. And this is the start. I will show you 02. I will show you in the chart just to understand. Let's say we take yearly. Which year is this here? 98. So we can't go more than yearly. Let's see. Oh no. So Berkshire Hathaway in 90, it was 6,000. Now it is 338. Do you know why? It's just because few stocks move faster than the whole market. Okay? And here when the stock market, when he was, his money is only 5,500, this is the low of 90, people, they say the stock will never go up more. And there is another thing I will tell you, because most of you, they don't know a lot about what's going on with Berkshire Hathaway. Yes, and he was what we call hedge fund manager. Not yes, a fund manager. It means he manages some people's money, but they are few. It is only his friends and his family when he began. Okay? And understand that Warren Buffett, he takes each year 45% of the profit of the whole fund, and he put it to himself. And he promised 4% loss. It means, let's say the fund lost 100 million. He only put 4 million for the loss. The 96 million loss is for the other people, according to what they put. But understand that Warren Buffett began early when the market was very, very cheap. Okay? And he bought stocks. Understand that stocks move faster. Another thing, why the money grows so fast for Warren Buffett? It's not because of the market. It's because there is advertisement about him. So, another thing, he has no split in his stock. There is no split. It means he doesn't divide his stock into many shares, like Apple, like Microsoft, like other things. They don't. That's why, if you bought like him, if you bought Berkshire Hathaway at 5,000 in 1990, now whatever money you have, you will be a millionaire. Even with the small money, you become a millionaire. Okay? Because the stock doesn't split. This is one big thing that almost, like for example, Apple. Apple, a few years, the stock was $700. They split it into 7. It means from 700 it becomes 100. What does it mean? It means it becomes cheaper, and then it goes up, and then they become cheaper, and then the company is becoming bigger and bigger and bigger and bigger. But the price is not becoming bigger and bigger and bigger. So you understand? This is a way Warren Buffett sees things. He decides for the fund with his friends, but he is the one who decides. And he comes with a way, not because he gives confidence to the shareholders. Confidence. When you see that the stock is always going up, what you should do? You should buy and keep it for the whole life. That's why he was successful. He has ideas that no one has done it before. Okay? Because all the people think about the company itself, how to make it bigger and bigger and bigger. They don't think about the stock because they think about how much they make. So O2, he said, he did a partnership until 100 million and then he closed the partnership. No, he has done 7. He has done 7. I think Berkshire Hathaway is one of them. He did not sell everything. No. He did one and he lost money, and then he did another one and he make money. When he buy Berkshire Hathaway, it was mill companies. And he said, in 20 years, I did not make money, and it was my failure at first. I have studied Warren Buffett a little bit, and I have made videos. Guys, if you are looking for to understand how he make this partnership, please, you can go to my channel, put Warren Buffett. You will find all series of videos. I speak about his partnerships. But understand that he began his partnership with his friends and family. And at first he was losing money because when he bought Berkshire Hathaway, it was mills. And the mills, textile companies, it is their dead end. He doesn't know. He just, although he studied economics, he studied economy, But he thought it was good. But after a few years, 20 years, he said, it was a failure. And he bought gas stations and it was a failure also. The only thing when he began to make money, when he buys Coca-Cola and he buys Geico insurance. And then when he discover insurance and banks that are good, so he just stick with that. Banks, credit cards, those people, they get money for sure. Like credit cards, like banks, they get a percentage. Okay, and they give dividend. This is what he wants. He wants dividend. And now he is living with billions of dollars of dividend each year. So he is one of the best. Even if he stays 1,000 years, his money will never end. You see that? It's a lot of money. So guys, I think this today we try to stop here. So if you have any other question, please, and I will try to make this live each Saturday the same, and I will see if you have more questions. Please ask right now. If not, I will stop it, and I will see you next week. And guys, if you have questions or you want to answer me questions, this is my email. I can make videos for you guys on YouTube. I can make you videos. For those who wants to see my subscription, just go to my website and try my subscription if you want to. And that's it. Pump and Dump channel say, how many years have you been trading with your strategy? It's probably took some time to develop and complete. Yes. It's 2010. 2010. I lost money. A lot of money. But in 2011, I began successfully until now. 2010, because I was doing day trading. I make some money, and then I begin to do swing trading, and I lost money, and then I begin to understand, because at the time, as you know, anyone can lose money because you don't understand what's going on. For me, before, when I see a gap up, a gap down, I don't understand why is that? Why the stock jumps? When I see the stock is going down into a downtrend, I don't understand why. If the stock is going up into an uptrend, I have no idea why. When I see penny stocks, one is $1, tomorrow is $5. I don't understand. So I want that year. It was my experiment. So I lost a lot of money because of the experiment. I don't know what's going on in the market. But right now, from 2011, when there is the big move of the gold and silver, I was always in gold and silver, always in most of the stocks. Some years we have energy stocks. They were doing excellent. Some years we have it means it's 1 year, 2 years, 3 years, there is a big move in some industries. For me, I was following. Yes. If you follow me on Facebook, I was following Facebook daily. And I make a lot of money from Facebook, but as a swing trading. I didn't invest in it. Okay? I didn't invest. But when it was 1999, I say it is a buy. If you go, you find the people who are watching me, they were 113 views only. It was very funny. It was very, very funny. So I didn't invest in Facebook. But if you go to 2012, I was against all the analysts that they say sell Facebook, it is a bad investment. For 6 months, the Facebook was going down. Whenever it has a move up, I will be there. But when it was 1999, I make a video. If I find you the video, it was very, very funny. It was very, very funny at that time, where I always speak. Let me see. 6 years ago. Notice on Facebook. Let me see 6 years ago. If I find more than 6 years, so let me if I find the video, if I find the video.
Where is the best place to get leads online for your business? Is it YouTube, Facebook, Twitter, or Instagram?
Oh, this is
if you are a small business owner who needs more leads and prospects,
very quick money, and it is too much money. That's because of the nature of trader. I am not a day trader. I am.
Let me see if.
So I don't trust the stock. I'm not an investor. I am not a position trader. I am what we.
So 6th June 2012. I am trying to search for the stock, but this is 9 May 2013. No, it's not. It's not this one. Guys, if you find the video, let me know. I don't know how to search for it. I find a lot of videos, but I find 6 years. I don't know if I can search. There is no opportunity here to search by 6 years ago. Let me see this. This is 2000.
Hello guys, good morning. Now in this
this is 2000. Now it should be 7 years. It should be, the video should have 7 years. I don't find 7 years. So guys, if you found the video, let me know. These were my first videos. I'm just trying to find the. I find 6 years. I don't find 7. It should be old. It should be 7. Um, let me see. I find a video. Let me see if it is
My name is Travis Few. I'm the owner of Few Moves.
Hello. Stocks, all the stocks going down, okay? These are the exceptions. That's why people always they are confused in this thing. Now, why? Because I know.
I find the I find 6th of June. 6 September. No. This is not 6. No. 5 years. It should be 7 years, guys. Seven years. 8 years here. Oh no, 7 years. I don't know why I didn't find it. It should be yes. I find one. Let me see if it's the one. Yes. Guys, I find you. Let me see. Let me see. Oh. Hello guys, are you watching? Yes. She gave me the name of the thing. I just found it. Hello sir. I'm just trying to how to trade Facebook, a big opportunity. Yes, this is the video. Let me see. It has 7 years ago.
Three years ago, I was thinking about how to make more passive income online so that I could work from
Okay,
anywhere.
just a
And I was
minute.
walking through-
Guys, let me show you. So okay, let's Chrome Paint. Okay, so let's go and check the video. I will show it to you guys. Just a minute. Hello guys. So I will thank you, Kenyan boy. Shikar Sood, just wait. I'm trying to show them my video about Facebook. So please be patient. Shikar Sood, be patient. So I will show you the video about now. Look guys, look what did they say on the 19 June 2012 about Facebook. Okay, just look the video and listen.
Hello again. Here is Facebook. It's an IPO. It started some weeks ago, and it starts with $42, and it goes down, and then it's going up, an uptrend, and this is the time where you can buy Facebook. I hope you can make money from it. Thank you very much.
So as I told you, 890 views, but at that time it was just a few guys who are following me. So from this time, and it goes up, and I make a lot of videos because I begin with Facebook from the beginning. Even the Dow Jones, it was the same thing. Okay, so this is just to show you that it's good that they have videos that they are recorded. At least if someone sees something, he will know that it is a true thing. Hello Shikar Sood, hello Free Trader, hello James Armstrong. You should come earlier because we are going to stop the session because we begin 1 hour and a half before. Now Shikar Sood, say, can you answer the question? What is the question? How do we come to know that market is volatile? Yes, the market can go down and go up, and it doesn't follow a good trend. I showed you guys. I will show you again. Now, if I show you Dow Jones. Okay. Now, see this here. Dow Jones, for example, which is index in the USA, since you are from India, so see the trend, it's excellent trend, it's going up from 3rd of October until 27 November. Let's say it's 2 months. 2 months the stock market is good. But you see here this day, 2nd of December, and the 3rd December, there is a gap down. What does it mean? It means a lot of mutual funds have sold the stocks. This is a volatile days. So you will never know until they occur. So you should put stop loss in order to exit. Okay? So no one knows the future. So you should be there in order if you have stock. So if you don't want to stay, you should put stop loss whenever the price that you want to exit, and the price that if it goes to, you will be going to sell. This is why we put stop loss. We put stop loss to protect us from the stock going down too much. So is that okay? And this is for you, Shikar Sood. Please, Free Trader and James Armstrong, hello. But we begin, as you know, we begin at 9 and you come at 10:35. So it's too much. So next time you should come early in order to be with us on time. So guys, if you have more questions, please ask, because I'm going to stop it here. Normally today I do 1 hour because we don't have that many people asking questions except at the end. So yes, I know, James, you were you should try to start at 7 for Europeans. Now listen, the idea of the time, it's very, very hard because everyone is different. Here in America we have 3 hours. Someone, when I do 9, for some people in the West it is 6, and sometimes 6. Maybe some people are at work. Some people are working at night, so they can't come. So in every time you put, it will not be good for some people. So that's why I put it at 9, and we could change it to another time. But whenever you change it, other people who are listening, they will not come because they have job, or they go to sleep because they wake up early. But the good thing, the video is always there tomorrow. It will be saved, and it is tomorrow in my channel. For if you want to ask me questions, the best thing is send me emails. I can prepare for you answers, and I make videos, or I make a live and I put these answers there. Okay? But the time, it's always different. Okay? It's always different, and I can't cope with all the guys' timeline. It means each one has his timeline. Okay, so guys, do you have any other question? Because I can't speak anymore. I feel I can't speak anymore. So guys, thank you very much for coming. And guys, this is my email and my website. Check my let me give you email and the thing. Try always to send me an email. It's better. At least I can communicate with you. I can make videos for you if it is something that you want. I can make videos for you in the channel without waiting until the live. The live is always at 9 EST, which is Eastern time, and you can ask questions. I can make you videos during the week, or you can come early, like 9 o'clock or 9:30, and you can ask your questions. Should we buy from the support liquid penny stocks to grow our small aggressive? Which support? There are a lot of supports. I don't discuss training here, because you can ask me, Nasa, you can ask me a question. Because support line, we have many support line, and each one is different, and there is a big risk in buying from the bottom. There is a big risk. It's more easier to buy when the stock is moving up than when the stock is moving down. Okay, always there is risk, but it's very difficult. But for me, I get used to find the day. For example, last year, 26 December, I told you this is the beginning of the big trend. If it continues, yes. Each week, I make a live on Saturday, and I say it is a strong week until May. So some people, they believe and they buy and they make money. Some, they just look and they watch, and that's it. Okay? So thank you very much for watching, and see you next week.